Okay, awesome. It's recording now. All right. Let me share my screen once again. Okay, I said Forex trading. We are going to talk about the Forex market. It is a huge market, about 6 trillion. It means everyone can join the market and make their own money. However, in that big market, there are winners and losers. The losers are actually the majority, almost 80%. It can even go to 90%. But there are also winners who are about 20% of the market. What we're going to be doing in this class is to learn to be the winners, how we can win. That's what we're going to be learning here. Now, I'm going to mention how you trade, or what is this trading all about. See, how to trade. How to trade. So first thing, you need to sign up with a Forex broker. Okay? So you need to sign up with a Forex broker. So you should get your Forex broker. There are many Forex brokers, but out of those many, there are a lot of scams or those that don't have a good reputation. That is the thing here. You need to find a broker that has a good reputation. When you hear people saying Forex is a scam, it's usually because they've signed up with a broker that is not reputable. You put your money, you may fail to withdraw the money, or you find that the website after 2 days is no longer working. It happens like that. So, in different countries, let's say you're in the UK, there are brokers there that are regulated in the UK. They are registered in the UK and regulated there. You should actually register with a broker that is regulated in your country. So make sure your broker here is regulated in your country where you are. If it's not regulated in your country, at least know it's regulated in some other country and there is it has got some reputation. That is the first thing that you need to do. You find your broker, you sign up, you get an account. It should not be easy to sign up. If you see it being too easy, then you know that this one is not reputable. When you are signing up here, the sign up process, it goes through the normal figure, we call them figure, or some people call them the KYC. You should figure or do the KYC, know your customer processes, which means you put your details, your date of birth, your names, all of that. You may upload your passport. You may have to upload your proof of residence. That's what you have to do. If you join a broker and they don't tell you to submit these things, it means they are not genuine, because all the regulated brokers, they're trying to avoid money laundering, financing of terrorism. So they should do this thing of FICA and the KYC process. If they don't do that, that is a red flag. Stay away from such a broker. Very important. Then once you sign up, they give you, most brokers give you a real account. Okay. This real account is where you put real money and where you do your real trading. They can also give you a demo account. This is for practice. So if you get your demo account, you are practicing here. This is where you practice in your demo account. You practice until you are able to use their platform, because the demo account is actually like the real account. The only difference is the money that you see there is not real. It will just be fake money. That's what you find in this demo account. It will be fake money, not real money. Real money, this is where you deposit your real money. I just want to warn you that if you sign up, rather go to your demo account and practice until you know how to use the demo account. If you're now sure that you now know how to use the demo account, then you can now deposit money into your real account and start the trading. Don't rush to trade until you feel like, okay, now I know what I'm doing. Then you go, you open your real account, or you go to your real account and then you put your money, you deposit money, and then you start trading. The problem with this demo account, let me just say demo accounts here. The problem with demo accounts, they can give you a false sense of knowledge. Like you feel like you know when you don't know at all when you're using your demo account, because it may have a lot of money. You see, it may have a lot of money, and the money that you have in your demo account will not be like the same as the money that you can deposit in your real account. And when you're not dealing with the demo account, you now feel like, yo, I'm invincible. I know this thing. I've been making money. I turned my demo account from $10,000. It's now $100,000. And then you feel like, I'll just go to my real account and put money and then you lose all that money. So know the difference that demo account have fake money. See, this is fake money. But trades are real. See, the trades are actually real. Are real. When I say they're real, I mean real prices here. This is real prices. If you go to the demo account and you look for the price or the exchange rate of the US dollar and the rand, what you see there is exactly what you see on your real account. So you have trades that are actually real. And everything that you see there is actually the real thing that other people who are doing the real account see. But the issue is this fake money. It can be too much and give you false confidence. So be careful when you're using a demo account. Don't get too confident from the demo account. I hope I'm clear. Let me pause a bit. Maybe someone has a question. Anyone with a question, you can press the raise your hand and I answer. Any question? Yes, Wilbert.
Hi, Kudzai.
Hi,
hi, Tim. You did mention that when, say, supposing you're in the UK, they are reputable traders. Would you be able to mention one or two so that we get real leads up, proper people to join with? Suppose we want to try this.
This broker, it's quite global. eToro. You have ever heard of eToro?
No, I'm a virgin to this, so it's total.
Oh, okay. Let me write here. I think in the UK, it's actually global. Check. It's called eToro. It's a good one. For me, I use the one called XM Global. XM Global must be. It must be licensed in the UK. It should be licensed in the UK. It must be from the UK. It must be licensed there. I'm not sure, but you check. Okay. Because in South Africa, it's regulated here in South Africa. It's XM Global. And there is this other one called Plus 500. But you know what you have to do, William? You need to, let's say you go on your iStore. Is it Apple Store? Yeah, the App Store where you buy your apps, where you download your apps. Mm-hmm. You check the reviews there. You check what people are saying about that platform. It's very important to go there and check. Usually you see a lot of bad stories, but the bad stories are not because the broker is really bad. Sometimes it's because people have lost money. You know, people when they lose money, what they say. It's usually like that. So check that, and you will not have the Apple on their App Store putting like apps that are not reputable. They will not do that. So they'll put apps that are reputable. But you look at the reviews, what people are saying about the platform.
Okay. Yeah, and another sort of like lay question is, can you join more than one broker?
Yes, you can. Even let's say this XMA Global. Yeah. You can join them and even open 5 accounts with them. You can.
All right. Okay.
Yeah, they allow you to do that.
Brilliant. Thank you.
All right. Any other question? Any other question? Okay, Wilbert, can you put your hand down since you're not asking? And anyone with another question? Or if we don't have a question, maybe let's move on. I want to say something here about the 4 stories that you hear about forex trading. See, the truths. I'll just mention the truths here. One, you see now, I said to you, guys, let's have a forex class. You see how many people are here? There can be so many. It's just that many people are at work at this time. It's not a very good time. Let's say I had called this meeting maybe during the weekend or during the late hours. You may find that people can come and they are 100 or 500, and then you charge them money. You say, okay, each one of you should pay me 500 rand or something. There are people that you see there on social media talking about forex trading and making money from forex trading. Most of them don't make money from trading forex itself. They make money from these, from teaching people. You see the way I'm teaching you, I can say, oh, you pay me. And then they make money from there. And then they'll be showing you like, yeah, forex is great, it's great. Yet it's not that great. People lose money. But they will be making money through this because this is safe. If I come here and say, guys, I'm going to teach you forex, pay me 1,000 rand. You come here 10, I have 10,000, or you come here 100, I have 100,000, whatever I have, and I go home, I can live a flashy life and I can show you big money and big cars and all of that, and you think that, oh, things are fine with forex trading, yet they may be not. So be very careful about those you see flashing and saying, come, I'll teach you and stuff. They may be lying to you. They may not be doing the trading itself, or they tried and lost money, but now they're getting money from other things that are not trading. So be very careful there about the trading itself. The truths are, one, people lose money. You see, people lose money. It's very true. And I said there, 80% lose money. The other truth is people make big money. There is really big money. Hey, you see it. If let's say you open the account today and you start trading, you may even you may even send a resignation letter from where you work, or if you're working, you may send them a resignation letter and say, I don't want to come to work anymore, because you would have made maybe $3,000 in a few hours. See, yet your whole month's salary is not even $3,000. Then you can send a resignation letter, only to find that the following day you will lose that 3,000 and more. See? So be very careful. It's don't rush to make decisions. Don't get too excited. Don't also encourage a lot of people to join, see, in your name. As much as you are here, I have to tell you clearly that this thing is there are a lot of risk, so that you know, because Wilbert will go out there, tell someone and say, hey, come, let's join, and that person loses a lot of money because you told them to join. They will hate you, they will not be happy, they will not be. So try to not encourage people to join, or if you encourage someone to join, tell them the truth or the reality that happens. Teach them the do's and the don'ts so that they don't get lost. Very, very important there. I want to emphasize that part. This is the truth. Now, I want to tell you how you do the trading itself. How to trade. How to trade. On all the platforms, really, it's the same thing. I think you have heard people talking of what to call binary options. They call it binary options. But you actually have 2 options here when you're trading. You have 2 options. The 2 options are buying. So you either buy or you sell. This means that you don't need to have a very high IQ to trade Forex, because really, anyone who can read where it's written buy, it may be even color coded, maybe green for buy, red for, for sell. Anyone can do that. You don't need to have a very high IQ to trade Forex, because you're only doing 2 things: choosing to buy or choosing to sell. That's all. Now, the dilemma here is when to buy and when to sell. That's a challenge. When to buy and when to sell, and also what to buy and what to sell. That is the challenge. But the options that you have is simply buying and selling, and then you collect profit. That's what you do. You collect profit, but you can also collect losses. You may be collecting profits or you're collecting losses. And here you collect a profit. It's only a profit and a loss when you close the trade. You get me? So you can open your account. You go to your account. You open it, and when you open your account, you see it saying minus $500. See, minus $500. It does not mean you have made a loss of minus $500. You haven't made it until you close the trade. As long as your trades are still open, it's still minus 500. It can change and become green and become a profit. The same thing also occurs. You may open your account and find that it's saying plus $500, which means you have made a profit of $500. The profit is not your money until you close the trade. I hope you guys are hearing it, that profits and losses are only profits and losses once you close the trade. Before you do that, it's not a loss or it's not a profit. This is very important. If anyone has a question here before I move on, please ask about the profits and the losses and the buying and the selling. Any question? All right, it seems people don't have questions. There are other people that I don't see on the screen. It also means they don't have questions. All right, if you guys don't have questions, then I can proceed. But please take note of the stuff that I'm saying here. Take note of the stuff that I am saying. So this is what you'll be doing. Now, I want you to go to the next stage now and say, when do you buy and when do you sell? When do you buy and when do you sell? So when to buy or to sell. Right. In most of these platforms, you are going to see graphs. See, I'm just going to draw a graph here. This is a graph. You guys, if you did mathematics, it's like a Cartesian plane. I'm going to say that. So this is time, and this is maybe price. You wake up in the morning, the rand. I'm going to use the rand. Let me use a different pen. You wake up in the morning and you find that the rand. So let's say this is the 0 point. It's in the morning. Maybe it's 1 a.m. You were just not sleeping. You wake up. It's 1 a.m. here. That's the time, and you find that the rand is at 15 rand to $1. You're here. You look there and you look at previous days and you say, oh, in like 2 days ago, 3 days ago, the rand was actually selling at 16 or maybe 15.90 to the US dollar. But today at 1 a.m. is at 15 rand. What do you expect here? You may expect it to fall. When it falls, it means the price here is going to go up. You expect the price to go up to somewhere there. Maybe to maybe 16 is here. That's what you expect. You expect that the price is going to go up to 16. If you expect that at 1 a.m., you should buy. See? So you buy when you believe that the price is going to go up. You choose the buying option. You say buy because you believe that the price is going to go up. Then you choose buy. That is it. Then maybe around 2 a.m. This was 1 a.m. Maybe now it's 2 a.m. here. You really wake up and you find that, oh, wow, the price actually got to 16 rand. See, it got there. It means you would have made a profit. You see the difference from here to there, this difference. Let me use a green pen. This difference here. Can you guys mute your mics? Can you mute your mic if you're around people? Now, the difference here, how much is the difference? It's 1 rand. You see, this 1 rand here is your profit that you have made. The 1 rand is the profit. So it means if you bought 1,000 US dollars here, if you bought 1,000 of them, you now have a profit of 1,000 rand because the price of each US dollar increased by 1 rand. So you have a profit of 1,000. If you bought 1,000, when you buy, you are buying the US dollar, by the way. You bought 1,000 US dollars and the price of each US dollar increased by 1 rand to be 16 rand. It means your profit is 1,000 rand. So your account will actually be showing the 1,000 rand green. Let's say it will be saying plus 1,000. If you close this sale, if you close this trade, if you close it, your balance in your account is going to increase by 1,000 rand. That's what it means. It's going to increase by 1,000 rand. Then you close the sale, now you see you have more money. Now it's now 2 a.m.
Not that much. You need what?
All right.
Why?
Mic is open and all right. I muted that mic. Please, if you have noise around you, just mute your mic. Okay, now it means you have made a profit of 1,000 rand. That's it. You close the sale. Now you see that it's now 2 a.m. Let me rub this, all this. All right. And now at this 2 a.m., you find that the price is now 16 rand. What do you expect? You expect it to start falling. That's what the market does, by the way. The market goes up and down like this. You expect it to fall. So at 2 a.m., you can open another trade, which is you choose to sell here. You are selling there because you believe that the price is going to go down. So you may choose to sell because you believe the price is going to go down. So there are times when you sell, there are times when you buy. So you buy low. In short, I can say all these places, you see, when you are here and you expect it to go up, you buy. When you are here, you buy. When you are here, you sell. So in short, you buy when it's low, you sell when it's high. You buy when it's low, you sell when it's high. This difference between the highs and the lows, it's your profit. That's the profit that you'll be taking. This is what you'll be doing, really. Buying and selling, buying and selling, buying and selling. Before I go to the what I would call the challenge of this, because someone will say, oh, if things are so easy, then we should be making money easily. I'm going to explain what is the challenge here. But before I go there, is there any other question? Any question? Before I go to the challenges of this buying and selling, what is the challenge really that people face? Because it will look easy to many people if you just say you buy and you sell. Any question? It seems like you guys are getting this thing. Because I don't see anyone raising a hand. Patrick, you don't have a question?
It's pretty straightforward so far. I mean,
it's so straightforward.
That's why we don't.
Okay, so let me go to the challenge now. The challenge here, Wilbert, is that you don't know. You see, you are here. It's at the rand is now at 16 rand to the dollar. You are here. Then you'll be like, now I'm going to sell. Yet the rand that day does not want to stop there. It wants to go to 17. It means you are making the wrong decision. So the wrong decision that people make, why we lose money? See, the wrong what? Decision. Occurs here. Because sometimes you may say it's wrong, but it's because of history. You've been living in history, and I think for the past 10 years, the rand has never reached 21 rand to the dollar. It has never reached that. So maybe you find it at 17. The rational thing that anyone will believe is that no, it's not going to go anywhere now. It's going to go back down. See, that's what you think. So the wrong decision is that you find a market moving down. The graph is moving down. Okay, let me draw the graph properly. The graph is moving down. It's moving down. It's here. And in your mind, you say, no, it's down. It's low. Let me buy. Only to find that this graph is going to keep going down. You see, you buy here, then it keeps going down forever. You may end up now losing money, see, or you're having a loss, a negative profit. So the wrong decision that you make is you buy thinking that it's low, yet it's going to go lower. Or you sell thinking that or you may find a graph like this. It's going up, and then you find it here. It's like it's being stable. And you think that, no, it's not going to go anyway. You come here, you sell. Only to find that this graph that day, for whatever reason, there have been bad news from America or from China or whatever, or good news, by the way. It's not always bad news. It can be good news. This graph still wants to go up. It means here, you're in the wrong side. You see? You're now making losses. This is a loss because you sold thinking that that's the apex of the graph, only for it to reverse. You make a loss through that. These are the wrong decisions. This is why people lose money. It's because we don't know, really. We don't know that the uncertainty, the risk that is in this whole thing is that you don't know when to buy. You can go anywhere and ask technical people and all of that. You're going to see people who say we're selling signals. I think some of you who have traded Forex before, you have heard people saying I'm selling signals. See? These people, when they say I'm selling signals, what they're simply saying to you is like, buy now, buy, or say, oh, sell. Most of the time it's wrong. You can even go on the internet on some sites and say, should I buy or sell the rand? You'll find a lot of sites with technical data saying buy or sell. But if things were so easy, then we should be having millionaires all over. But we don't, because that analysis is always wrong in most cases. It's always wrong, or it's usually wrong. See? So I want to emphasize to you that there is no much technical analysis that I think you can do. There is no much knowledge that you think you can have. Most of the things here, you are using your common sense. So you're going to rely mainly on common sense to make this decision of buying or selling. See? That's why we all lose money. Some of us did mathematics, we're quite good in calculations, graphs. When you see a graph, this is what we do every day. But I can tell you, we still make the wrong decisions and lose money, all of us. So this is it. Any question here about the buying and selling and the wrong decision that people make? See your graph is going down and you feel like it has gone too much down, I should buy here, only to see that it's still going to go down. Or you say it's going up, only to see that it's going to still go up and you're selling. That's the wrong decision that people make. Let me check if there's anyone with their hand up. Who is this? Judy, you have your hand up. What do you want to say? Check the mic.
Yes. Hi, everybody. I wanted to ask, does it really, when you're making decisions here, would it really be helpful if you are somebody who you really need to have sort of a little bit of a broader sort of knowledge on what's happening? Because, say, sometimes markets are affected with, say, for instance, the impact
news
of COVID. Yes.
Yeah, you mean the news. It's very important. Yes, I was going to go there. Very important there. That's why, if you ask me now, I only trade the US dollar and the rand. That's what I only trade. I don't trade other currencies because I don't know much what's happening in Canada. I don't know much about what's happening in the UK. but I stay in South Africa, so I know a lot about things happening in South Africa. And I also use the rand. I know how it appreciates and depreciates. Like the cycle, I know the general cycle of the rand, that hey, if you see it approaching 17 rand, really expect it to fall anytime, to go back, not to fall, to go back to 15 or 16. See, I know that because I've been seeing the cycle for many years, or for a lot of time. That's why it's important for you to trade in areas that you have a very good understanding of, and know the news that affect that commodity. Let's say it's gold. Gold, who buys the gold? India buys a lot of gold for whatever reason they do there. They buy gold to do whatever. And gold is also taken as a safe haven. So when you see there is COVID and all of these things, you're going to see the price of gold going up. That's why in the past 2 years, countries like South Africa and Zimbabwe who export gold, they've been making a killing from gold, because the price of gold was up when everything else is down due to COVID. People tend to put their money in gold as a safe haven. So by that, you now have an idea of what affects the price of gold. Or if you see it going down, you know why it is going down, or if it is going to keep going down. See, so that's very important, Judy, what you said there. You should know something about this. So don't trade. Don't trade everything. Go, you buy silver, you buy gold, you buy a New Zealand dollar, you buy Namibian dollar. It shouldn't be like that, because if you do like that, you are being a jack of all trades, and you become a master of none. It's actually better to say, I know gold, or I know silver, or I know this, the US, the pound. Let's say someone who lives in the UK, they know the dynamics of the pound and the US dollar, or the pound and the euro. You know the dynamics there. It's easier to trade those currencies. Easier to trade the currencies that you know. Yes, any other question? Any question? Okay, I don't see any other hand up. Let me continue on this buying and selling and signals and making wrong decisions. I now want to go to, let me see, speak of the wrong decisions, the losses and stuff. I want to now go to your account, or why people make big money. Yes, why people make big money in Forex. Why? I'll just say why big money in Forex. Why big money? Those who live in Harare, especially in Harare, you find a lot of people there, or even if you go to Mozambique, you find a lot of people on the streets selling Forex. You see, those people, what they're doing is exactly the same thing that you're doing. They buy the Forex from you. If you go to those people who are selling Forex, you say to them, I have US dollars. They will give you maybe, let's say, 15 rand for $1 US. But if you go to them and say, I want US dollars, they'll say it's 16 rand. You see? They make a profit by that. They buy low from you, and when they're selling to someone, they sell at a profit. So this thing of Forex is just like every other commodity that you sell. You buy it at a certain price and you sell it at a certain price. That's what you're doing. But now, why do people make big money in Forex? There's something called leverage. Please, this thing, get it very, very clearly how it works. Leverage. Leverage is your friend. Leverage is your enemy. You choose what it should be to you, but it can be both your friend and your enemy. If I go to my account, I deposit 1,000 rand. Then I get a leverage of 1,000. When I am trading, I trade as if I have 1 million. Right? Does that make sense? That is what leverage does. It gives you wings to fly, and fly very high. You bring your 1,000, and then your broker says, no, the leverage is 1,000 for you. And then when you are trading this, you are trading now as if you have 1 million rand. Now imagine someone trading with 1 million rand. They can do a lot with that money. You see, they can do a lot with this money. So it gives you wings to fly and fly very high. But then the higher you go, the harder you may fall. That's the downside of it. If you use a very high leverage, you end up falling. That is why the folks that sell Forex in Harare never do this. They never suffer from that because their leverage, those guys, if they come to the market with 1,000, let me use dollars, they come to the market with 1,000 US dollars. Their leverage is just one. They just have $1,000. If you come to them, you buy the $1,000 for whatever amount of rands. That is, let's say you buy for 16 rand, then he will leave the market with 16,000, isn't it? That's what he lives with. He's fine if you buy with whatever. So he won't lose money anyway because his leverage is one. This person who is using a leverage of 1,000 on the Forex trade can lose all of that money. That is why people lose money in Forex. It is because of leverage. So if you ask me, or when I'm trading myself, I use a leverage of 50. My leverage that I use is actually 50. You can even use one. And if you, let's say, use a leverage of one, there is no way you ever lose money. You won't. Or if you use a leverage of two. So check your leverage. Whoever the broker you sign with, they love giving you very high leverages. The most common one that you're going to see in most brokers is 888. This is the most common leverage that they give, which is a very high leverage. So you should try, and when you sign in and all of that, set your account, choose your leverage carefully, and say, do I want to use a very high leverage? If you want to use a very high leverage, it means you can also make money fast, very quick. Even with 100 rand, just a 100 rand deposit, you can make thousands or millions very quick. But it also means you can lose millions very quick. That is what leverage does. It's your enemy, it is your friend. So I have to emphasize that part of leverage. For me, when I'm doing my trades, I use a leverage of 50 and I'm happy with it. Any question on leverage? Yes, Steve. Take the mic.
Hi, Kudzai. Thanks for taking the time to share with us some of your knowledge on this issue. Listen, so you're talking about leverage, and you're saying that 1,000 rand at a leverage of 1,000 is like trading a million rand.
It's now, like you are having a million rand, yes.
Right. So my question to you is say you're leveraged 1,000 on 1,000 rand, and you're making these trades, and the trades don't go your way, you lose the money.
You lose the money fast.
You lose the money fast. My question is, on your account with your broker, you've deposited 1,000 rand to trade with, and then you've been given this leverage. But when you lose this money, are you losing more than the 1,000 that's on your account?
Okay, awesome. The brokers have, I don't know this, the technical name of it, I forgot the technical name, but you will never lose, most brokers really, you never lose more than what you put in. So don't expect to put 1,000 and come out there in debt with minus 1,000 or minus 2,000. No, it can, when they're trading, let's say the trades are blowing out, we call it a blowout, where your account is being blown. You actually be watching it exploding. It will explode and even go to minus 10,000. But after 24 hours, it will reset back to zero. So you won't lose that. So the 1 million that you'll be having, it's like your broker has given you the wings to fly. They're like giving you some money. You won't see 1 million written on your Steve. You won't see 1 million like you have a balance of 1 million. No, you'll still be seeing your balance of 1,000. But when you are buying this rand, it means you can buy even 1 million rands. You see, You have bought R1 million. You can buy them because you have R1 million now in your account. You can buy R1 million. If you buy R1 million and the rand moves up even by a cent, you see, it moves up by a cent after you buy. Then you're saying 1 million times 1 cent. What is your profit there? Steve, let's do the math. You have 1 million. You buy 1 million rand. Okay. Then the market moves up by 1 cent, which is 0.01, right? You see, you have 1 million rand. Each of these rands moved up by 1 cent. If you multiply it here, what is your profit?
10,000.
You see, 10,000. This is what leverage does to you. It makes you make these big profits fast because a slight movement. The reason they give leverage, Steve, is because the currencies can move by something like a fraction of a cent. See, it's rare. There's currencies like the rand that can move by 10 cents up and down. They can do that. But if you go to the British pound, really, when you see how it fluctuates, it may just be by even a fraction of a cent the whole day, or just 1 cent. See, so for you to make money from the dollar or these very stable currencies like the euro, for you to really make money from them, you need leverage because it allows you to make a lot of money with very little deposited. That's what the leverage does to you. Just a simple movement or with 1 cent gives you 10,000 rand, as you just saw there. But now, that is a good news tale. What if the market chose you buy, and then remember we buy when we think it's going to go up, then it does the opposite. It goes what? Down by minus what? 0.01. That's 0.01, 1 cent. It goes down. What happens? What is the loss? If it moves the other side, you see, the loss now is minus 10,000 rand. What happens to your account? Blown up. Why is it blown up? Because, Steve, you came with 1,000. As I say, that your account is still saying 1,000. Oh, sorry, I'm writing the wrong 1,000. You see, your account is saying 1,000, and you have a loss of minus of 10,000 rand. It's blown out immediately. That's how people lose money trading Forex, because they choose a very high leverage, which makes them to make big money fast if the things goes their way. But if it goes the wrong way, you lose money immediately in seconds. When you say you lose money here, it doesn't mean you start today and you lose money after 10 days. You start now, you lose it after 2 seconds. That is what happens if you don't do your things properly. So this is one of the don'ts. Don't use a very high leverage. That is my don't. That's what I'm saying to you. I said I use a leverage of 50. You can use a leverage of 20 or less than, whatever, so that you save. However, if you have a small leverage, you also you don't have these wings to fly, by the way. So you don't have these wings to fly. It restrains you. You're constrained to fly high. Yes. Any other hand? Patrick, can I give? Or Steve, you still have something to say? Let's go back to Steve.
No, thanks. Very well understood.
Okay, so you can put your hand down. Let's hear from Patrick.
Okay, thank you very much. Quite interesting. Tell me, what is the cost of using this leverage? Do they charge a certain percentage? And also, as you buy and sell, what sort of percentage are we talking about in terms of charges and by the broker? Are they high? Are they low? Or do they take when you make money and they don't take when you don't make money? I don't know if you understand.
Okay, yes, I got your questions, Patrick. One, the leverage is actually free money. It's not like it's a loan that you're gonna pay an interest on. It's actually sort of like free money. So you don't pay for the leverage. You see, you don't pay for that. Some brokers charge you when, let's say, you are withdrawing money. They charge you when you're withdrawing money because they have to make a transfer, a wire transfer to your account. let's say now I'm in South Africa and I'm using a broker that is registered in the UK. You may find that when they are paying me my money, they are transferring money from a UK account to mine. So they may charge me for the bank charges. Then some of the brokers, or most of them, when you deposit, let's say you deposit 1,000, they may charge you from that. They may take some of that money when you make a deposit. That's what they do. The charges are quite low. Eh? The charges are quite low. I can tell you that Forex trading, you will not cry that I'm being charged a lot. Nah, it will not be. So the charges are not your worry. Your worry is losing your money. That should be your worry, not the charges. They are usually very low.
Noted.
Any other question? Any other question? On leverage, I think you heard about leverage. That is a good thing when things are going right. It's a bad thing when things go wrong. And by the way, we are only worried about things going wrong. So please, please stay away from this huge leverage. Stay away from it, really. Stay away from it. It can be your enemy. All right, if there is no other question, I have spoken about leverage, then I have to go to the next thing that I want to mention. I don't see any hand up, so let me go to the next stage. So this is the don'ts. Don't use a high leverage. Then now, the next thing that I'm going to tell you here is what we call the margin. See, margin. You're going to see these things written on your accounts. Margin, margin level, etc. Margin level, etc. But let me just focus on the margin. You go to your account, you deposit money, whatever it is. James has deposited money into his account. Let's say you deposited 1,000 rand. See, you deposit 1,000 rand into your account. You chose your leverage. You are ready to trade. What we call the margin is the amount that you are using in your trade. The margin is the amount that you're using in your trade. So for this 100, for this 1,000, I may just use 100 rand to trade. It's like, this is the money I'm risking, 100 rand. This is my margin, it's 100 rand. Or I can use 50 rand to trade. Remember, I'm using this 50 rand with my margin, with my leverage. So don't say, oh, it's 100 rand, what does it buy? The 100 rand can actually buy a lot of things because you have leverage. You see, you have your leverage. So if you're using 100 rand here, it's like you're buying with 100,000. That is what we call the margin. Guys, make sure that your margin is never more than, most people, if they give you if you are a novice trader, like you're starting, just make sure that this margin here that you use is less than 5% of your deposit. So if you deposited 1,000 rand, use a margin like I don't know what's 5% of 1,000. It's 50 rand, right? Use 50 rand to do your trades. It reduces the chances of your account being blown. If you use 50 rand, which is, check your margin every time you are trading. Check your margin, that how much money did I use? Check your margin and your account balance. So as you trade, remember you are trading, you make profits. You're closing trades, you're making profit. You'll find that after maybe one day, your account that you put 1,000 is now 2,000. You see, it's not 2,000 rand after the end of today. It's not 2,000 rand. When you're trading tomorrow, obviously you can now have some more wins. You can now trade with 5% of 2,000, which is 100 rand. So as you grow your account, you can become bigger and bigger and bigger. That's why you see people like George Soros. You see George Soros, that billionaire called George Soros. He's a Forex trader. One of the, actually the most famous Forex trader, by the way, George Soros. George Soros can never have a blowout in his account because it is a lot of money. He's a billionaire. Even if he just trades with 1 million, he can afford to have a loss of 2 million in his account and leave it like that, because tomorrow it will go up and maybe be a profit of 5 million without his account blowing out. The blowout occurs when your negative profit is now being equal to your account balance. That is where your account blows out. Where you are having a negative profit that is closer to your account balance, your account blows out. So how do you avoid that? Use a little bit of what is in your account. You will never blow up. Okay? If you use a little bit of 5% margin, the margin is 5%. I didn't say margin level, guys. Don't mistake this. There's what is called margin level, and then there's what is called margin. Margin is real money. Just make sure that your margin is 5% or less of your account balance. If you do that, you can have now an account fluctuating. Let's say I have 1,000 here. See, in my account, that's what's deposited. The loss can be minus 50 rand. I will not have a heart attack because of this, because it will not blow my account. It will be minus 50 rand. I wait, it can go back to be positive, no problem. Now, if you have a loss of minus 999, see, if it's around 8 p.m. at night, you're not going to sleep, because your account is going to be blown anytime, unless things change and then things start moving the other way, and then the loss cancels out and it becomes a profit. You can. So you don't want to put yourself on the edge. As much as it is exciting to do big trades and get big profits, this is where people lose their money because of that. So I emphasize on the margin. Take care of this. All the brokers, there will be something written as margin. You also find what they call margin level, which is a percent. Margin level. This margin level is like a percentage. I think it's something over something that it gives a percentage. The moment it gets to 20%, if you see your margin level going to 20%, this is a blowout. Most brokers, once your margin level gets to 20%, they automatically close all your trades. If they're in losses, you get the losses immediately. See. So for me, when I'm trading, I try to make sure that my margin level is big, even 400%. I may use a margin level of 400%. Please see the difference. I said margin is actually some money, which is a percentage, which is a part of the whatever. In other words, the margin is the amount of money you have used to do your trades from your account balance. That's the margin. There is what is called a margin level, which is like a percentage. It's actually a percentage. Try to make sure it's always high, because once it gets to 20%, you are approaching a blowout. So these are the things to look forward to. Don't use a high margin. All right, I have spoken about margin. Maybe someone has a question about this margin thing and how it affects your trading. Yeah, or maybe someone will be like, so how do I know that now I'm using more than 50 rand or what? Yes, who is this? Bianca. Bianca?
Hi. Can you hear me?
Yes, I can hear you clearly.
Just like the other guy said, I'm also a virgin at this. Make me understand. I understood the leverage part. So I've set my leverage, and then I've set my margin. Obviously, it has to be less than 5%, like what you were saying.
5% off
my value.
Account deposit.
Okay, understood.
There is margin level. There is margin level. You see that on your account when you're trading, the margin level, it will be indicated. It will be floating. It's a floating. It will be going up and down. The margin level, it's a percentage. It goes up and down according to the profits or the negatives on your trades. You see?
Okay.
Yes. So once you see your margin level approaching 20%, you should know that you are approaching blowout. Know that. The margin is actually a dollar amount or a rand amount, which means it will be saying to you 50 rand or 200 rand. This is the amount, part of your deposit that you are using in your trade. So part of your account balance that you're using in the trades. I said that amount should not be more than 5% of your account balance. You hear that, Bianca?
Yes, I do.
If you have 1,000 rand in your account, don't trade with all the 1,000.
Yeah.
If you see your margin saying 1,000, you are taking a huge risk, because if it moves just by 1 cent in the wrong direction, you blow out. See? So using a smaller margin, it creates sort of like a buffer. You know what's called a buffer? You're sort of like a buffer or a soft landing, where you allow your account to go to negative up and down. Those who trade stocks, let's say you're trading stocks on the ordinary stock market, let's say on the JSE, you're trading stocks on the JSE. You can buy the shares for Impala Platinum. You can buy them today, and then you open your account tomorrow, it is minus. But does it blow out? No, it doesn't blow out. Why it doesn't blow out is because you don't use leverage there. See? It doesn't blow out because your leverage is 1-to-1. The reason people lose money in Forex is because of leverage. We want to make money fast. That's what Forex does. It gives you money very quick. But that is the risk. I know people know that the higher the risk, the higher the return. It's true. That's what happens in Forex. So I can come here and make big money. And yes, I can make it today, only to lose all of it tomorrow. So don't use a high leverage, use low. If let's say you are now starting, use a very low leverage until you gain whatever. Because now if you lose 10,000 tomorrow, because there are some people here who want to pay school fees and they're like, I'm going to go and trade Forex and have money to pay my... Don't use school fees money to trade Forex, or money for food to trade Forex, or rent. You sleep in the bush. Please don't do that. Don't use that. Use money that you are willing to lose, or that you are ready to lose. I can say that. Yes, Bianca, you still have a question, so that we'll go to Judy.
Yes, I haven't even finished. I haven't even asked.
You okay? Ask your question.
Forex trading, for me personally, I haven't even seen the interface. I've just heard a lot about it. So I'm just going to sound a bit blonde right now. If I then mark my margin level.
You don't mark it. You don't mark it.
If I put my 5% margin level, right, on my 1,000 rand, right, it means daily I have to log in and check on my trade, because I heard you said the guy who's making millions can just leave his money and it grows and it grows and it grows. How does that work? Do I constantly have to check my account? Do I constantly have to log closet to buy and sell every day? Please, I'm just confused there.
Okay, the very important question there. The markets, I'm going to show you my screen, and you'll see how the markets jump up and down. You see, 1 second is a lot in Forex trading, because in that 1 second, the market can jump by 1 cent to blow your account. So it can make you a slave, where people be like, hey, Bianca, where are you? And you're looking at your phone the whole day. And when you're looking at that phone, you're waiting for the market to move. Remember this thing called volatility. See, lack of stability, really, is what makes you money on the market. The good thing about this is that if it's going down, you can make money when it's going down. When it's going up, you can make money. Because if it's going down, if you have sold and it's going down, you make money. If you bought and it's going up, you make money. So in Forex trading, you actually want something volatile. If it's stable, then there is no profit or loss that you're making. So you need volatility. You don't need stability. You need volatility. Then you may wake up in the morning and you find that it has been at 15 rand, nothing, no movement. So you keep checking, you see? Because the moment you go to the bathroom, you come back, you find your account blown because it moved when you're not there. It went the wrong direction when you're not there and blown out your account. Or it actually went up and there was a profit, and that profit cancelled before you you close the trade. So it may need a lot of attention, Bianca. It may need a lot of attention. This guy with $1 million, George Soros, he can say, okay, it's 2022. I expect the rand to fall such that by 2023 December, the rand will be trading at 20 rand to the US dollar. You get me? He will make the trade and sleep and not even check his account. He doesn't care because he knows one, they will not blow out. He will just go in 2023 December and check his account. That's what happens with this guy. So yes, you may have to be looking at your account depending on who you are and how you think. Then I hope you got answered there, Bianca, that you may have to check your account so much and look at them. Or you can relax if you want, because you have other things to do. Hey, you can relax and come back later after 2 hours and check. Like now, I've been talking to you. I have trades that are open. I haven't been checking the trades, but I know I did my trade safely, so I don't go. I expect to go there and find the account blown out. I expect to go there and find maybe there are more losses or there are some profits. I can close some trades and get some money. It can be like that. Yes, that's true. Bianca, any question again?
No, thank you.
Yes, so but please don't be a slave to it, because if you become a slave to this, you'll be so disappointed after 10 days of sitting on your phone doing nothing. You are not going to the field. You may even say get off from work, get a leave. After 10 days, then your account blows out. Really, you'll be so disappointed and depressed. So please stay away from it. If you're not calm, the markets are for temperament people with patience and good temperament, discipline. If you are someone with greedy and instability, stay away from it. Be temperament. Don't love money too much. Say you make 500, you think that you can make 1,000. Most people actually trade for an hour and they leave it. Just 1 hour, you go. If you want to spend 24 hours, then you're going to be fired from your job and also lose the money from Forex, and then you have nothing now. So you came broke and you live poor. You don't want that. Judy, you had a question. You had your hand up. Can you say something, Judy?
Anyway, I think you sort of answered my question whilst you were answering to Bianca. Thank you.
All right, awesome. Anyone else with a question? Okay. Yeah, I believe now I have really mentioned the important things that you need to know for you not to be blown out. Very, very important. Practice with your demo account until you are confident. Practice with the demo account until you feel confident. Don't also grow fake confidence from the demo account, because the demo account, you can have, maybe they can give you 100,000 in your demo account. Then now you think, yes, you know how to trade because you turned the 100,000 into 200,000 in 1 hour. No, you don't know how to trade. Just that the big monies there were acting as your buffer. So they allowed your negative balance to go down and up and not blow your account. The bigger your account, the less it is to be blown. See, but it's all about the margin, because even if you put 10,000 and 10,000 rand, and then your margin is 10,000, like you trade with all the 10,000, it will be blown. See, so if you put 10,000 and you trade with 500, you will not have your account blown. There is a lot of buffer there. So whatever, don't risk too much into this, because really we don't want people calling us and going on social media. Very soon, next week, we're going to see people tweeting there, hey, so made us lose money. Please, no one is saying go and lose money. I'm saying these things because I know myself, I lost money from this. So I'm experienced in losing money, and I don't want to lose money anymore. And I don't want anyone else to lose money. I don't want that, and I'll never want that. So don't do that. And so that's it. And then I also mentioned the leverage thing. Don't use a huge leverage because it can mislead you. See, Bianca, that margin you're talking about. If you use a high leverage, you are going to to end up using a high margin or whatever. But it's very dangerous using a high leverage. So please, let's hear that. The leverage, Bianga, is one thing that you can set. You actually set there on the trading platform. You set, you go to it, you choose. When you are actually signing up, they ask you what is the leverage that you prefer. Choose a very low leverage, and anytime you can adjust it. You are allowed to adjust it. So that's the second thing. Then I also said trade what you know, what you have access to. Yesterday, I think it's yesterday, or if it's the day before, yeah, I think it's yesterday, where the Japanese yen went to a 50-year low. Do you hear me? 50-year low. Yesterday, it went there. Yet you could be trading it and say, oh, it has never gone there. Then it goes to where you have never seen. So yesterday, people who were trading the Japanese yen could have made losses or made a lot of money, because the market can surprise you. You may think that, oh, gold, I know gold, it has been trading at 1,800. For it to go to $2,000 today when you started trading and blow your account. So don't say you know anything. Just try to be very calm and rational in all your trading. That is the key. And what else did I mention? The margin level. I said the margin level percent. Make sure it doesn't go towards 20%, because the moment you see towards 20%, you are in danger zone. You are at risk of being blown out. That's it. All right. If people don't have questions, I want now to go to a trading platform and show you how the trading platform really looks like that I use myself. All right, any question? Okay, if there's no question, now I'll go to my computer, to my phone. Yeah. Yes, someone is will bet you have your head up. Yes, what's the question?
Yeah, I don't know whether you can hear me.
I can hear you say.
I was just going to suggest, I was thinking you were going to do this in series, like maybe for an hour or so. I mean, we've got other commitments, but we're really keen and interested in what you're talking about. Are you going to schedule another meeting, or?
Okay, you know what I'm going to do? I'm going to, I recorded this. I'm going to download it and then I post it on, yeah, on social, on YouTube.
Okay, all right.
Yeah, so if you want to go somewhere a little bit, you can go. I think I've said enough. I'm just going to show people the.
Okay, I'll just wait for the demo and then go.
Yeah, just a few. I don't even take 10 minutes, so guys.
Okay, fine, thanks.
I'll not take 10 minutes for that. All right, let me do this. So I will try to log in. I'm going to transfer to this device. All right. Okay. Share screen. Right. So this is what I'm going to show you is it's a it's a demo account that I'm showing you. I think you can see it on the screen. There it is. You see, I have a floating profit. This is a demo account. It's not my account. The account balance there is 3,000. Right. That's the account balance in this demo account. Then you see the margin there is 314. It means out of the 3,000, I use 314 to do my trade. My margin level is 906.34%. That is the margin level. That's one I said. It should not be more than, it should not go towards 20%. Don't let it go towards 20%. What you see on the screen there, these are the things these are the currencies that I may trade or want to trade. I don't want to trade the Australian dollar, the whatever. I'm trading the rand there. Let me open. So I made these trades here. You can see the trades. The one on top with minus 96, I bought, it says buy there. I bought 1,000 there at 15.74. So the price was 15.74 and I bought. Now what is the price? 15.6 something. It means I bought thinking that it's going to go up, but it didn't go up. It went down. That's why I have a loss there of minus 97. But there is another, see, there is another account there, another trade of 2,000. I bought it at 1572. I sold, I didn't buy, I sold. That's why it says sell there. I sold at 1572. After selling, it actually went down. See, the price went down. That's why I have a profit there of minus 128. It's a floating profit. It's not my money until I close that. So if I press here, it's saying close. If I close there, if I go back to my balance, I'm going to close this, guys. If I close, then let me, this is taking my profit. I'm taking my profit now. If you go to my account balance, you see what it is? It increased by 127. So my account balance is growing. So I can go back now to my graph. If I come here to this graph, I see that the rand has been falling. It's now there at 1560, whatever, 4. I may say, no, I don't expect it to keep falling. Then I'll go here and press buy, because I expect it to go up from here. So I can buy, I choose the amount that I want to buy. Let's say I buy for 2,000 again. I bought for 2,000. So this is a sell. This sell is going to make me a profit if it starts going up. If the price starts going up to 1570 to 15 what. If today the rand wants to just make miracles and keep falling, then I'm I'm going to make losses. I'm going to keep making losses. See, so this is the thing. When you buy, you don't know if it's going to keep going up, or when you sell, you don't know if it's going to go down. It may go down. How much you stop? You say I stopped it when it was 127. I could have left it, and maybe it could go to be 200 or 500, but I don't know. It might switch sides again and go to be a loss. So sometimes now look at my margin level now. My margin level is 1,570. That's dangerous. See, that's dangerous. The margin is 1,570. Check my margin level. It's now 174%. That's dangerous, because once it goes to closer to 20%, I can reach a blowout of this account. It can blow out anytime. So you need to manage the amount of trades. So I was not supposed to open another trade here, but I want to show you another trick that you can use to increase your margin level. If you see all the trades that I have are buy. If I go and make a sell trade of 2,000, you're going to see what happens to my margin and my margin level. I'm going to make a sell of 2,000, which is a bad decision at this moment because it's too down, but then I can do it to anchor my account when things are going bad. Now, see what happens to my margin level. My margin is now 942. And my margin level has gone up. It was 100 something. It's now 288. I am now a bit safer because of that. So sometimes don't put a lot of buy trades. You may just put something to reduce your margin by doing the opposite. If you have a lot of sell, you can just put one as a buy. It sort of like anchors your account and you don't blow out fast. So maybe I'm going to do another video where I explain these tricks that you may use to whatever. So this is the account balance and everything. If I press here and I go to my account, you see all the details that you see. Look at my leverage. See, my leverage is 1 to 50. It's 50. That's my leverage that I'm using on this account. It's 50, which is a safe one. So don't use a high leverage. But this is a demo account. That's why I'm doing all these things that I'm doing recklessly. It doesn't matter if it blows account. So you should use your demo account to do all the experiments that you want to do and see what happens. Okay, otherwise, guys, that's it for today. If you have any question, just say now. Whatever question that you have, you can just say now, and then we close. Any question? Okay. I don't see any question. I'm not hearing any question from anyone. Yes, Bianca, you have a question?
Are you going to be holding any other classes besides you putting on YouTube? Because I feel this is not enough. The moment you started showing us the live feed that you were saying, it was now making more sense. It's unfortunate there's not enough time. So I really suggest you do another session showing us this demo thing.
Okay, let me show you something here on the currencies themselves. You see that graph? The way it has been moving down almost for a long time. You see, it reached a peak there and it kept going down. There are people who bought at that peak thinking that it's going to keep going up, and then it changed course, it went down. And there are people now who think that it has gone down and they buy only to see that it's going to keep going down. That's the wrong decision I was mentioning, that we make this wrong decision because we really don't know. It's like guesswork. We don't know what's going to happen, but we just try to use our historical experience and all of this technical what people can talk about. But in reality, we don't know where the market is going to go down. It's going to go, and the market moves fast. Really, look at the figures. They change every second. They're changing always. They're moving constantly. This is why you may become a slave to it, because you sit to want to look at it. That's the slave part. And I also want to say something. There are movers of the markets. The movers are from Tokyo, from London, from New York. The movers are from Tokyo, London, and New York. So you need to know the time the people in America wake up, because these are the people who move the market. You may find this price. You see the rand is there at 56.3. Just wait until it's 3 o'clock. After 3 o'clock, when the Americans are waking up and joining the market, you see what will happen there. The price can just change in the wrong direction or another direction and move fast immediately. Within seconds, you see it being maybe 16 rand. It can move fast. So be careful. In fact, for novices, when you see that the Americans are about to wake up, stay away from the market, because it's a dangerous time. It's very volatile. It moves up and down quick. But it's also time to make money. That's the good news. You can make money that time because that's the time the market is moving. The other times it can be dormant. So the movers of the market are from London, from New York, from Tokyo. You can Google and check when is the time the New York markets open. What about the London markets and what else? Once you know that, it can give you an idea of the dangerous time to trade or the right time to trade, because this is where you make money. All right, enough of that. I think we should close the whole thing. Unless we have someone with a question. Okay, I don't
just
see
want
anyone.
to say thank you very much, Kudzai.
Okay, you're welcome. Don't go and lose money, please. Okay, Charles.